Hello, everyone. This is AKW Analytics, otherwise known as Adam, and I'm here with the Bull Bear Analytics Show, episode 1. If you visited this channel in the past, you've noticed that we've done a couple different formats for these videos, but we're excited about this one because we brought on a guest host named Rich, who is helping us out with some stuff, and we're really excited to have some interaction rather than just me talking into a mic. And so, with that, I'll bring him in. And Rich, maybe if you could just tell the viewers kind of how you got into Bitcoin a little bit, and then we'll move on from there.
Yeah, sounds good. And Adam, first of all, thanks for having me. I'm excited about the opportunity to work with you. I know you guys have a pretty good history of doing a really good job of predicting price action for Bitcoin. So I'm excited to work with you guys.
Appreciate that.
Yeah, so I've been following Bitcoin since 2013. And I like to pride myself on as an early investor, but there are certainly people out there who beat me to the punch because Bitcoin's been around a while. But yeah, I bought in at the end of 2013. I've been following it pretty intensely since. It's actually what's spurred my interest in finance and economics, and I went on to do a little bit of work for an independent research newsletter. And yeah, right now my appetite for Bitcoin isn't being satiated with my real world job, so I needed to do something in order to get that, to whet my appetite. So yeah, that's what brought me here.
Yeah, well, we're happy to have you on board, and we think this will be a great working relationship here. And so, that kind of brings me to when we first started talking and getting to know each other, you seem to have a real, a fairly, complete picture as far as the global macro kind of currency issues go in the world right now, particularly with China. And so I think a lot of Bitcoiners know that when the yuan goes down, people want to flee. People that live in China want to get out of the currency. When they implement capital controls, they want to get out of the currency, and that sparks maybe some interest in Bitcoin. But I don't know necessarily if they know the difference between this offshore and onshore market and what maybe the implications of that are. I mean, could you just maybe touch on that real quick? You have any insight there?
Sure. Yeah, and everyone's talking about China right now. China. It's almost like you get sick of hearing about it, but it's really important. China's played a major role in growing and economic growth in the world for quite some time, almost a decade now. And yeah, so we're talking about the yuan, and you asked specifically about the yuan onshore and offshore.
Yeah.
And what seems to happen is basically the PBOC has a little more control over the People's Bank of China. That's PBOC.
Right.
Has a little more control over the onshore yuan. Right. That's the yuan traded in China, and then the offshore yuan is traded in. Oh my gosh.
Is that Hong Kong?
Hong Kong. Yes.
Hong
Yeah.
Kong?
Thank you.
Yeah.
Yeah. Exactly. And they have relatively less control of that. So we recently saw that play out in the divergence between the yuan rate to the dollar. So the USD CNH rate,
Right.
that's the offshore rate, and the USD CNY, which is the onshore rate. We saw like a pretty big split between the two recently, and I think that's evidence of a lot of capital outflow happening through Hong Kong and not China, obviously, because China itself has so many capital controls, it becomes really difficult. There's a lot of financial friction and a lot of strict capital controls to try to keep money in China. And, as a result, money gets sort of filtered out through Hong Kong instead. Because we all know, as governments put in capital controls, it doesn't really do the trick. It just incentivizes people, economic actors, to circumvent them in certain ways. And that's sort of where Bitcoin plays a role.
Sure. And so I over the past couple of days I've been keeping an eye on the charts and watching the kind of the correlations with Bitcoin. And it seems that right now the PBOC doesn't want to let this thing get out of control, or they don't want it to seem like it's out of control. So they're
Absolutely
backstep a little bit. And so these spreads have compressed and the yuan has come in a little bit. And maybe that's what, some of that drop we saw last night in Bitcoin had to do with, just the pricing in of maybe maybe a slightly slower depreciation of this thing than the market was pricing in previously. But all in all, it seems to me that Bitcoin's holding it up pretty well despite all these shenanigans of the central bank.
Right, and I agree. I think that's probably an astute observation in terms of like the correlation there, as they pulled in the reins of they being the PBOC pulled in the reins of the offshore yuan. I mean, they did some really crazy stuff. First of all, injecting dollars right into the market. This is all sort of speculative, but right. it just makes too much sense for it to not be the case. Injecting dollars right into the system in order to hold that peg, or not a peg, but really to keep the offshore yuan from floating even further away from the dollar. Right.
Just to create. I mean, I feel like you might, if they just let it go, you might just get some crazy speculative spike.
Yeah. Well, so that I think is what they don't want right now, because they see, the thing about China is culturally there's this idea that like if people perceive the government as out of control, like then there's all the shame involved and there's like embarrassment, and they don't want that to happen, right? That's a really centerpiece of their culture. Mm-hmm. and it's important for them to have, at least the government, to have the perception from the people that they know what they're doing, right? And I think you probably saw that with the Bitcoin price dropping. Some people exiting Bitcoin because they like, oh, okay, the PBOC has it under control. We're gonna be okay. Everything's gonna be fine.
Yeah, that's what I was thinking exactly. So one last thing on this topic is so Bitcoin is a currency. It's called a currency, and all currencies are valued relative to other currencies. And so you have, the majority of the Western world prices Bitcoins in dollars, and the Chinese markets price it in yuan. And it seems like over the past couple of months, the yuan has had more influence. But let's say we get a really, really strong dollar index type rally.
Right.
Is that going to take the wind out of this thing, even though the yuan's going down?
I'm sorry, the wind out of what thing?
Of Bitcoin. If the dollar rips 100 on the Dixie,
okay.
Even though the yuan's devaluing, the dollar's skyrocketing, and Bitcoin's valuable relative to other currencies, you start going, oh man, okay, well, they're selling the crap out of gold, everything, oil's going down, everything's going down, we might we got to sell Bitcoins too. Or will that be more than offset by the Chinese effect that we're seeing?
Oh, so there's a lot of different parts to the question. I'll try to keep it brief. It's basically what we've seen since 2009 is $6 to $9 trillion. That's just estimated from the Bank of International Settlements of dollar-denominated debt issued around the world.
Okay.
And this is important because, I think some estimates are at like 2.1 trillion in China. So as the yuan devalues, that's really bad for those who have dollar-denominated debt directly injected into China, right? Like these are foreign investors that take dollar-denominated debt and then they translate it to yuan and then invest it in China. And if it devalues, they have to, basically they're short dollar and they have to close out that short, right? So if we have further yuan devaluation, I don't think it's going to be anything small. I think, and I've seen some estimates, 20, 30, even I've heard one guy, Mark Hart, he's a really well-known investor. In a recent interview, he predicted 50%. So that could be insane. And that's to keep them from defaulting on all their debts, right? All these dollar-denominated debts keeps them from defaulting, right? But in the meantime, we could see the dollar really shoot up. Now, to answer your question about, does this affect the Bitcoin price? Well, look at the flip side of the dollar shooting up. You've got all these emerging market currencies that are melting down, right? They're high inflation. We've already seen it in Brazil, in Chile. We've seen some inflation in Canada, actually quite a bit of inflation in Canada. So as the sort of emerging markets and even some developed markets start to melt down against their currency start to melt down against the dollar, you know, we could really see the Bitcoin price kind of hold steady, which I think is similar with gold, right? You know, people think dollar goes up, gold and other commodities are just going to go down. Well, you know, gold is a really good hedge against inflation protection, and if you've got and Bitcoin, obviously. And if you're holding that in your portfolio when your domestic currency is melting down, you're doing a good job of holding on to your wealth.
Yeah, yeah, absolutely. I agree with you there. And you know, it kind of because Bitcoin is gonna be attractive in emerging markets, you might have, you know, kind of a perfect storm. And again, not that you're gonna get this massive rally just on that, because the West still has the majority of the purchasing power in the world, really, and so.
Totally.
Really see the price spike is when the Westerners start needing to use it, but I think that could more than offset a massive dollar rally, and it would, and Bitcoin, in my opinion, would outperform every other kind of commodity asset type thing that you could buy.
Yeah, absolutely. I totally agree. And to make things a little more interesting is if the U.S. heads into a recession and we see another round of QE, which in my mind I think is a good probability, and we can talk about that some other time. But you start to see a QE floor come into play, and that's when you get dollar depreciation, right?
Yeah,
and then we could really see some Bitcoin rallying.
Yeah, right.
You know, as a result of currency plays, I think we could see a Bitcoin rally despite it. But
yeah, I do too. And that kind of, this will be a good kind of segue into the next segment in that. So if we have a favorable global macro environment right now for something like Bitcoin, then, you know, what are maybe some of the hindrances as far as price appreciation, one of those being technical, and one of, you know, and the big thing in the community now is scalability. There's been a couple different proposals put forward, segregated witness by Peter Wheely. I don't know if I'm saying that right. And then, and that's kind of part of this Bitcoin Core proposal for the next year going forward that Gregory Maxwell and Peter Todd are kind of heading up. And then you have the block size debate, which is different and more cantankerous, certainly, where, you know, Gavin has kind of proposed another XT type fork, not 24 hours after XT failed miserably. So they keep trying this thing, but, you know, we'll get into that. But, you know, the main thing I want to say is that, you know, at BBA, we've been commenting for, over a year about this block size thing. And I think maybe late 2014, we were calling this thing, saying this was going to be bad for the community, that this was going to cause some rancor amongst high-ranking members. And that's sure enough what played out. And we have been certainly vocal about which side we're on, which has been smaller blocks, but recently had a kind of an interaction with Pierre Richard, who's an old friend of mine. He's a kind of a outspoken Bitcoin advocate as well. Really, really incredibly smart guy, who came out recently and tweeted that he said get rid of the block size completely. Point being, the debate has become too much of a distraction, and the economics right now don't support such a drastic reaction on both sides. And so, I don't know. I think it's time to put down arms, stop with this urgency and this kind of fear rhetoric, and move forward in a way that doesn't divide people, that brings them together. So again, the specifics of this new proposal, this block size thing, Bitcoin Classic, which just the name to me is deceiving, because he's trying to create a new Bitcoin and he's calling it Bitcoin Classic. So I'm not sure about their marketing there. So a little suspicious in my mind. But anyway, these hard fork proposals do nothing to help the price. And in addition to what the PBOC might or might not be doing with the yuan, about 2.5, 3 hours after this Bitcoin Classic thing came out is when the price dumped last night. So it was probably a bunch of factors, you know, combined into this one event that sent the price down $30 or whatever it was. But the market, I can tell you from the past year, doesn't like these kind of contentious proposals. So I say we stop with that, and let's keep the dialogue open, because this is important stuff, and the economics of it are going to affect how Bitcoin goes,
Yeah.
20, 30
You know,
years down the future.
I'm curious, Adam. I haven't really paid attention to the correlation between, what's going on with the block size in terms of, oh, there's this new proposal out. How does this affect the price? Can you talk a little bit more about that correlation over time since this debate really started heating up?
Yeah, I mean, the market likes the conservative route. It likes the route of certainty, like most markets do.
Sure.
So Bitcoin is working now like it's supposed to. It's fine. Changes to that, the market really doesn't perceive as a good thing necessarily because it injects uncertainty. And I can tell you just a tweet I posted maybe mid-December, maybe it was early January or late December. But anyway, the Gregory Maxwell kind of post scaling Bitcoin synopsis and proposal and path going forward kind of I guess it's just a guide as far as what the core devs want to do going forward, the conclusions from scaling Bitcoin. The market, that's when the market tore up from like 320 to like 450. I mean, the market just absolutely loved it because it's conservative. It addresses segregated witness, and there are some proposals to improve scalability, but it's very conservative. The market loved it. And then when the XT stuff started again, the block size debate got brought back up on social media. There was whisperings about new forks, and then here we've been sitting between 400 and 450 ever since that started for the past 6 weeks or so. And the day Gavin announces this thing, the market goes down $30. Now I can't say that there's any causation there, but certainly the market is reacting to what these guys do, as well they should.
Right. Yeah. Thanks for that.
We're again smaller, but we're just always on the side of conservatism and of fees. We want to make sure that there's a fee market for Bitcoin so that in 100 years, when our great grandkids are hopefully using this thing, it still exists in a way, right? There's still people mining the thing.
Yeah, right, and that makes sense to me.
Yeah.
Let's step back just a second and talk about segregated witness. And it seems like a good time to discuss that a little bit. And it is a conservative approach, a fix. Maybe it's a short-term fix, but it does at the very least buy us some time to figure out which direction we want to go with this thing. So segregated witness is, like you said earlier, is a proposal from Peter Welle. That's how I've heard it pronounced. I could be butchering it as well. But yeah, so we're talking about segregated witness, and it effectively allows signatures, transaction signatures, to not be stored in the blocks themselves. Which, if we could do that, we eliminate about it's a little less than 1 megabyte of data, which is now free for transactions on the blockchain. So right now we're talking about 1 megabyte worth of. Is that correct? I'm blanking.
1 meg block size limit is current.
Right. So we got 1 meg block size limits, and they're just about full. Depending on who you talk to, but it looks like they're filling up pretty quickly, I guess. Yeah. And if you eliminate these signatures from being stored on the blockchain, then you've just freed up almost an entire megabyte. I mean, you've got, I think it's like 0.75 megabytes of data that's now free to fill with transactions.
Wow.
Which, that's a pretty substantial amount of space to be storing transactions on the blockchain. So that could buy us a fair amount of time to figure out where we want to go from there, to see how Lightning Network, Adam Back's proposal, how that pans out. We could see we could get some evidence on whether that's going to be a real thing, like whether that's going to pan out.
Sure. Right. Yeah. If it's doable. So segregated witness, I didn't know that about that it makes the block smaller to allow for more transactions. But I've also read somewhere that at some point, or maybe there already will be an actual kind of soft fork increase to allow multi-signature transactions up to 4 megabyte block within a 4 megabyte block. Did I read about that, or is that completely off?
I didn't come across that. That just could be my own,
Okay.
insufficiency of
Yeah.
research there. I do know Peter Todd just released his BIP 65 proposal, which had to do with multi-signatures, but that's about the extent of which I could discuss that,
Okay.
unfortunately.
Yeah, no problem. And
But I do know for a fact that this thing is this segregated witness proposal is a soft fork, which is, I think a good thing for now, at least, to have it a soft fork, not a hard fork. And it does free up about 0.75 megabytes of data for new transactions. So that sounds like it seems like a consensus that that's a good proposal for now to be accepted.
Right.
But on the topic of soft fork versus hard fork,
Mhm.
I think you mentioned, you had some, I think you briefly touched on it earlier, maybe some contention to having a hard fork. Do you mind talking about that a little bit?
Well, I don't want to get too deep in the weeds, but essentially, when you hard fork Bitcoin, that's how altcoins are created that are based on Bitcoin's proof of work. Is you just take the source code and fork it into a new coin and call it something else. And that's essentially what they're doing here. It's just because it's being done by some of the early Bitcoin developers and former core developers. It feels like it's Bitcoin, like it's a different implementation of Bitcoin. That's kind of how they phrase it. But really, it's really a different chain, a different blockchain than Bitcoin's the one we're using now. Now, if all the miners move over to that one becomes Bitcoin. But boy, that's a big risk to take, and I just don't see it happen.
Right. I think we saw a hard fork was it 2013?
Yeah, like I think the day before, so I bought my first Bitcoin in mid-March, and then that hard fork happened, and the price went down like 50%, and I was like, oh my God, what did I get myself into?
Right. Right. Yeah. So I remember something similar to that, having a similar experience and being just kind of like not understanding what the heck was going on with this, with what the hell is a hard fork. I don't even know. I'm thinking about silverware at the time. So I had to start doing digging and to really understand it. But yeah, to get all the miners on board with a hard fork, it just seems like a really, really difficult undertaking at this point, especially because we've seen a massive influx of mining infrastructure and people, talking about investing lots of money into being able to mine Bitcoin. And if, this is money that, people can't afford to lose. And then if we need to do a hard fork and they don't necessarily agree with the proposal, I mean, you really start messing with the economics of it, right? Like people start losing money or you get like weird variations of Bitcoin out there and there's not consensus.
Yeah.
Right. So it can really screw up the kind of the economic fundamentals of Bitcoin. So, I'm all for avoiding that at this point.
Yeah. Well, I think we can agree there. And the market really is the ultimate arbiter of this stuff.
Absolutely.
If they keep up with this strategy and price keeps going down, eventually they'll get the message that they're just shooting themselves in the foot. They're shooting all of us in the foot, but they own a ton of Bitcoins too, I'm sure of it. So the market starts punishing them for this, then I think they'll stop doing it over time. But obviously they didn't learn their lesson last time, so maybe we'll give it another shot.
Sounds good.
And then lastly, I did want to here I'll just share the chart that I've been looking at.
All right.
It's a 6-hour chart, and I'm on Trading View here. Hold on. So I'll do entire screen. Rich, if you could let me know when
it comes up.
There we go. There, I got the thing. Okay.
There we go.
So this is a 6-hour chart, and if I kind of zoom out here, you can see where we are in the context of this whole run. So this was early November rally to 504, the new highs. They put in a bearish order block here, consolidated down to OT, which was really bullish that we came off of that. But now we're just sideways in this range between 400 and 450, like I said before. And I think some of this has to do with the scalability stuff and the technical issues. But I also think some of this has to do with uncertainty around China. And so essentially just for the time being, the range is 400 to 460. This range is tradable, but until you get a breakout from one of those two levels, this is where we're going to be. Do you have any thoughts about this kind of where we've been stuck here in price? And I know you're not an analyst, but just from a kind of just a retail investor's perspective, do you feel, like this is still bullish, or are you nervous?
You know what? I'm not nervous. I feel pretty confident. I mean, I'm not an analyst, like a technical analyst,
right. Yeah.
But in terms of fundamentals, like I have a good feel of what's going on in the world. Mm-hmm. I just don't like. We're talking about like we've talked about China. Their culture is a very heavy saving economy. I think at one point it was 50% of GDP was saved. I mean, that's an incredible amount of money.
Yeah.
And if just what's even
a savings rate, just do you know off the top of your head?
I don't, unfortunately. I should know that, but
less than 10%.
Way less. It's got to be significantly less than that. Yeah. So I mean, just based off the people I talk to, it's way less. Trust me.
Yeah. I agree.
And if you get even a fraction of those savings pushed into Bitcoin, we could really see a pretty huge surge. And of course that's speculative, but I'm thinking about all the mechanics of what's going on in the world right now. I don't feel much fear at all about the price. The only thing that worries me is this block size debate, but even then, your everyday investor doesn't really know about that, right? They don't know what's going on with the block size debate. All they know is that they've seen it work, and they've seen it. If people get in a panic, and if they can't buy gold, right? Like we've seen in it may have been Venezuela that was limiting or barring purchases of gold in order to keep as a way of control capital controls, right?
Right. Yep.
And if they can't buy gold, but they can easily buy Bitcoin, either through local Bitcoins or some other mechanism.
Yeah.
You could really see this take off, and that's all they care about, right? Like they don't care what's going on underneath the surface, because they don't know about all that. These people just want to preserve their purchasing power.
Right. Yeah.
So
yeah.
That's kind of my perspective on it.
And metals are just like, if you're in a kind of hovel in a third world country, so you start thinking about buying metals. You're like, well, what kind of metals? And you're like, all right, well, I need a safe. I can't afford a safe. Where am I supposed to put this stuff? People are going to rob me if they don't have gold and silver coins. That kind of stuff. Then you start thinking about Bitcoin. You go, well, nobody has to know I have these, and I don't have to tell anybody, and it can just be my little secret. So I'll do that.
Exactly. And, unfortunately, not enough people know about Bitcoin and the capacity to do that.
Right.
But, that being said, it's certainly there's certainly a market in places like Brazil and Argentina where they're having serious currency issues. So I don't think it'll take much to really pop this price up if things start going more south than they already are.
Yeah, we haven't even mentioned the halving, which we'll get to next week, perhaps. But
absolutely, yeah.
That's another thing. So if you cut the supply of something in half that's in demand, then the price goes up. People say this is priced in, but I don't know if you can price in a slashing of a supply by 50%. I don't know if this has ever been seen in global financial markets before. So we'll see.
Yeah, I agree, and we'll talk about that more next time. But I tend to agree with you. When people say something's priced in, I'm skeptical of that.
Yeah,
I tend to be skeptical.
Yeah, I agree. But here, just real quick to finish up, this is we're in a range, but you see these right here. This is this low is lower than this low and this low. So these lows are getting higher. The highs are getting a little bit lower as well, but. This is encouraging. We hit the 200 period SMA in this little short-term OTE here. So we are bouncing, but we'll see what happens at this trend line around 440. That's going to be the key level. But I want to thank Rich for joining us today. Boy, it was a great discussion. Longer than we wanted to go, but that's a good thing in my opinion. So
I certainly enjoyed it, and I really appreciate you having me, Adam.
Absolutely. Well, that's great. All right. Thank you, everybody, for joining. Again, visit bullbearanalytics.com to find out more about what we do in the Bitcoin markets. Until next week, cheers, y'all.